Hey all, Laura here. This is the third episode of our new crypto and macro show, Bits and Bips, exploring how crypto and macro collide one basis point at a time, with hosts James Seifert, Alex Kruger, and Joe McCann. Today, they have a guest, Hal Press of North Rock Digital, and they get into all of the many crazy happenings from the veto to Roaring Kitty since the last episode. This will be the final time that I introduce this new show, so don't forget that Bits and Bips will be on Unchained every other week, usually on Wednesdays. Be sure to like, subscribe, and give it a rating or review or a shout out on social media. And now enjoy the super fun conversation.
The commission is usually two Dems, two Republicans, and then whatever president is in power gets to choose the chairman of the SEC. In this case, it's Gensler, Democrat. So theoretically, he was a swing vote in Bitcoin ETFs. It's not necessarily true 100% that he was a swing vote here. So theoretically, Crenshaw was never going to vote against. She wrote a dissent letter, but Lizarraga, who is the other Democratic commissioner, did not join her in her dissent of those Bitcoin ETFs. He voted against it, but he didn't join her in her dissent letter. What's interesting, what I'd heard from other people, was that this could have come from Lizarraga, who spent, I don't even know, a very long time working. She used to be Nancy Pelosi's right-hand man. And a lot of what I was hearing, even leading up to the East stuff, was that Dems in the Senate and the House were getting really concerned with how the crypto polling was showing up and how many people own it. Hi, everyone. Welcome to Bits and Bips, exploring how crypto and macro collide, one basis point at a time. I'm your host, James Seifert, TradFi Archmaester, Lord of Bloomberg's End, here with Alex Kruger, Kruger Macro of House Asgard, Protector of the Realm.
Hi, everyone.
And Joe McCann, Lord Commander of Asymmetric and Master of Bonk.
Hey.
And joining us today is Hal Press for North Rock.
How are you?
All right, we're here to discuss the latest stories in the worlds of crypto and macro news. Just remember that nothing we say here is investment advice. Check unchainedcrypto.com/bips and bips for more disclosures. All right, guys, it's pretty easy to figure out where we're going to start here. I feel like we kind of have to start at what's going on with the veto of SAB 121 and just the overall political landscape. We spent a lot of time talking about it last time we did the show with relation to ETH, but obviously the Biden vetoed the House and the Senate's votes to overturn SAB 121 in Congress. Remains to see what happens next. I guess there's going to be a push to possibly try to override that veto, but I don't think they had the votes to do it, from what I know. I guess I'll turn it over to you guys. What do you think this was priced in? How did you view it?
Yeah, I think it was.
Well,
I mean,
yeah.
I obviously, philosophically, I wanted him to not veto it, but when you understand kind of like how DC works, it would be like an extreme sort of about face and kind of tucking his tail between his legs if he didn't follow through with this veto. So it was kind of like he had to, even though, a few days prior, he had said effectively, like, we're looking forward to working with Congress on a comprehensive digital assets framework, initiative, et cetera, et cetera. And you didn't see this really change in the price. And of course, naturally, they dumped this news on Friday afternoon after the end of the week, markets are closed, but also when they're less liquid. And so, I was actually a little concerned because he had effectively until today, Monday, to actually meet the deadline as to whether or not he would veto it. And historically, this type of news comes on Fridays after the close. So I didn't see any real change in the price action. Nothing really mattered too much. And that's why I think it was kind of priced in that the veto was probably coming, or that the market didn't care. Could also be the case that the momentum ignition algos were just off on Friday as well and didn't care to be trading against this type of news. But even, as we sit here today, we had Bitcoin clear 70,000. It got offered a little bit. It's trading above 69 right now. So it doesn't feel like this was a huge news event that drove price. Alex, what do you think?
I agree. I mean, price couldn't care less. So that says everything we need to know. And the other thing I think we should point out is that basically Biden had said explicitly that he would veto it.
Yep.
So kind of like, makes sense for the market to be expecting it. And something else I'd like to say is that I don't think really changes the change in attitude from within the Democratic Party towards crypto. One thing is Biden, and a different thing is the party as a whole, right? So I think we're not mistaken when we believe that things are changing politically when it comes to crypto.
Hal, you have anything to add?
No, I generally agree. I actually don't think that a lot of people expected him to veto. I think actually people had started to come to the conclusion that he wasn't going to veto after the broad shift that we saw in Democratic policy. I just don't think the market really cares about it. I don't think that it was necessarily priced in. I just don't think there was ever really an event to be priced in or not priced in. I think like people kind of know where the Democrats stand for the most part. I mean, the ETTF obviously, you know, was a big about face, but I don't think there's going to be, I don't think the market expects too much follow through beyond that. And then we obviously know where the Republican Party stands. And I think it's just focused on the election, and most of this stuff up until then is kind of noise. And crypto has a tendency to shake off regulatory stuff anyway. It's just like general context.
Yeah, I'll give you guys some inside baseball. I actually met Joe in person for the first time at Consensus last week, and I was with him on Friday afternoon, right before this news came out. And he's like, "I'm hearing that Biden's going to veto it today," and I was like, "Really? It's already a little late. I would have expected it by now." He's like, "I don't know. That's what I'm hearing." And then, sure enough, before I even got back to my room, the news dropped. So kudos to Joe on getting that call right.
You have to have friends in DC, man. It's the only way.
Yeah, I would also say, so like my whole view was there was two theories here on that flip of the ETTF that Hal was just talking about. Obviously, we spent so much time talking about. The obvious one is quickly like the Biden admin decided that this needs to change. We can't be completely anti. But there was this alternate theory that I think has more credence now. It's been around since basically we started seeing a reversal here, and it's more so that it might not necessarily have been the Biden admin that fully pushed this. So the commission is usually two Dems, two Republicans, and then whatever president is in power gets to choose the chairman of the SEC. In this case, it's Gensler, Democrat. So theoretically, he was a swing vote in Bitcoin ETFs. It's not necessarily true 100% that he was a swing vote here. So theoretically, Crenshaw was never going to vote again. She wrote a dissent letter, but Liz Araga, who is the other Democratic commissioner, did not join her in her dissent of those Bitcoin ETFs. He voted against it, but he didn't join her in her dissent letter. What's interesting, what I'd heard from other people, was that the theory was that this wasn't necessarily from the Biden admin. The Biden admin may have rolled over a little bit, but this could have come from Liz Araga, who spent, I don't even know, a very long time working. She used to be Nancy Pelosi's right-hand man. And a lot of what I was hearing, even leading up to the East stuff, was that Dems in the Senate and the House were getting really concerned with how the crypto polling was showing up and how many people own it. So there's this other theory now that I think with the Biden admin not actually vetoing, like they said, who knows what that means. I mean, part of me is agree with you guys. Like, he said he was going to veto it. He can't just not veto it now. It just doesn't look great, right?
Right.
But part of me is like, maybe this wasn't actually their doing 100%. It could have been just like the House and the Senate being like, we're going to lose elections if we keep allowing it to go down this. And I know for a fact the Elizabeth Warren wing of the party, those are still upset with the way this has been handled and didn't want this to be approved. And it kind of gives more credence to that potential like back dealing stuff that went on, and the fact that they issued the approval by delegated authority, which means there is no actual voting. So right now we can't see what the actual voting breakdown was. Was it 3-2 with Liz Araga breaking from the SEC chairman? Who knows? Or would at that point would Gensler have just voted and gone 4-1 with Crenshaw the sole dissenter? Who knows? We don't have a vote right now. Theoretically, we could if somebody wants to challenge it, but there would need to be some political viability for that. So that's just another theory to throw out there.
I was just going to say another interesting thing that you're touching on, James, with respect to kind of you're going to keep these guys, they're just going to keep losing elections or losing voters. Is I saw some polling last week before the veto was announced that about a third, 33% of Americans are seeing, crypto as something that they would consider with respect to whom they vote. And that was shocking to me. But then if you also kind of dive into the data of people that own crypto in the United States, they tend to skew younger. And I was chatting with a policy guy out of DC, and he said, it's like, Joe, do you know who could actually swing the election for Gen Z voters? Because this is where a lot of the Biden administration is losing favors with younger voters. And I was like, well, it's Taylor Swift, right? And he said, no. Do you guys have a guess of who it could be?
No idea.
Who this guy said it would be? I don't know.
I think consensus is Taylor Swift. It turns out that Zendaya polls higher than polls higher than Taylor Swift, and so there's this there's this notion of the election potentially being swung by Zendaya, which is just fascinating to me. And another reason like this is so fascinating is it goes to show how one, bifurcated the electorate actually is, and how it comes down to a handful of states, but also something like a Gen Z influencer, celebrity can actually flip the election. But two, I think it leads into some of the other stuff that's been happening recently around the money that's flowing into crypto, right? So you had A16Z put $25 million into the Fair Shake Crypto Pack. Coinbase just put another $25 million into the Crypto Pack. And so it's almost like the kind of heavy hitters in crypto are seeing the value of having that Crypto Pack, which was the third most valuable crypto pack. Certainly up until they just got this extra $50 million. It's almost like they're doubling down because they're saying like, look, this is actually starting to be a real issue. Trump is raising money with crypto. The Biden administration is being forced to actually, turn a 180 on their views with crypto in some respects. And so there's just more and more money flowing into it.
Yeah, and you were saying that was just like one of the third largest pack, not just crypto pack. This crypto pack was the third largest before these two numbers came out.
That's right.
And the whole goal is to get rid of politicians that are anti the space, which is just fascinating. There's obviously a lot of money here. It's starting to show up. I mean, there's tens of millions of Americans that have it. I think a little bit less than 1 in 5 Americans have some exposure. So it makes sense that it's finally seeing its day, but it's still a little surreal to see somebody like Trump come in talking about your right to self-sovereignty and holding your own self-custody and all these other things. It's kind of crazy.
I wanted to say something funny I saw the other day. It was an article basically saying the following: people who are obsessed with celebrities may be less intelligent, study suggests.
What a surprise.
So, yeah, what does it tell us about the U.S.?
Well, I think we gotta I think we got to at least touch on, since we're still talking about politics here and its influence on crypto, like the Trump conviction. So irrespective of your views on Trump, like he got slapped with 34 felony counts, which sounds like a lot. And I think within 48 hours, he raised like $35 million. Like, do we even think this has an impact on crypto? Like, what do you think, Hal, I'd actually love to get your take on this. Like, what do you think actually this could mean? Because there seems to be a lot of people gravitating towards voting for Trump, even though they've been lifelong Democrats or they would never vote for him in the prior election. Now they're leaning into it, and he just raised an enormous amount of money, getting 34 felony counts.
I mean, so I typically defer to the odds markets to understand if things have impact on the election, because I think like there's a lot of people that do this for a living that are a lot more plugged in than me on how these things impact the election, and the odds barely moved. So that also fit my intuition that I doubt that this this verdict has too much impact on the election, because I think people already just assumed that he was going to get convicted, and also even if he does, like his holder base doesn't care, and I mean he just tries to spin it as a positive, and it may be a positive for him. Truly, all press is good press. But I do think that the election matters. I just don't think that this impacts the election. But I do think that the election matters for crypto. I think Trump would represent a more positive regulatory environment than the Democratic administration, and so I do think it matters. But I just don't think that this verdict has any impact on it.
Yeah, I think the only impact is simply that he could raise more money, as you said. So I mean, and honestly, like he's just going to spin this constantly. But like it depends, I guess, how they're gonna do this, right? And how they're gonna spin it. I mean, the Biden admin could have jumped on this, and they basically didn't. So there's a reasoning there. Do they see it as like not that necessarily that big of a win, despite a lot of other Dems seeing it as a win, or they rather him just talk about this rather than talking about inflation and border and things like that? I'd rather him complain about his conviction and then talk about the other things that are obviously hurting Biden.
So I just wanted to say that I think is gone to my head. I would think that the conviction it helps Biden a little bit, like marginally. Yeah, the interesting thing is that the narrative online is that basically this is good for Trump. The conviction shows that the system is rigged, and therefore this is positive for Trump. I just don't see it, but I find it interesting how the narrative has been spinning this around. What do you guys think?
Well, I do think we could, to Hal's point, we could just go to the markets. Look what happened. Bowden, the Biden meme coin, like ripped, and then Trump. This is at least on Solana, like the Trump meme coin was dumping like right on the news. And I don't know if I don't know what has happened since then, but it is kind of interesting to see like how instantaneously a culturally significant event is then immediately monetized through things like meme coins.
All right. Let's talk real quick about the ETH ETFs. We talked about them last week, and we even kind of talked about them the first episode too. So I guess the first thing is, like, I think these ETF issuers are trying to figure out a way to pitch this. I mean, I kind of got into this. My panel on stage at Consensus was with the chief legal officer at Bitwise, a managing director at BlackRock, Joe, Cynthia, who runs Fidelity's digital assets, and Caroline at BNY Mellon. So these people are like way up in the business. They were all caught off guard by this approval. I don't know how well prepared they are for these approvals, but I can tell you they were all completely caught off guard. And I'm not sure they know exactly how they're going to pitch this. I mean, with Bitcoin, it's really easy, right? Like digital gold, simple one-liner. There's a lot of talk about what's going to be. I've heard digital oil. I've heard an application. I've heard there's a whole bunch of different things out there. One, how do we think this is going to be pitched from these issuers? What's the one liner they're going to use for advisors and institutions? And where do you guys think, now that we've had a little bit of time to settle and look at this and think about this, how do we think these flows are going to compare to the Bitcoin ETFs?
Can you, James, let me flip the question here and send it to you? Like I'm very curious to know what you think. If you have to highlight a single data point that illustrates why they were caught by surprise.
Yeah. So, I mean, the SEC was basically telling them, not explicitly, but they're in the way that they were answering questions, the way that they were dealing with all these issuers. They were telling them this isn't going to be approved. It's not happening. I said this on the show last time. Like I'm pretty confident that there was likely a denial order set up. I've talked with people in and around the SEC. There's departments of the SEC that were not ready didn't know this was happening until Monday when news kind of broke, when we broke the news on Twitter. So, I mean, I'll give you an example. Joe from BlackRock, he said on stage, you can find the recording from the Consensus. He said a month ago, I told my team to stand out and eat stuff because it's not happening, and we don't need to keep wasting our time like trying to prepare for something that isn't going to happen. So if BlackRock's telling all their guys to just completely give it up, it's not happening. Like that just tells you that the SEC was very blatantly signaling that this isn't going to happen. So if you talk to anyone in DC, anyone in and around the SEC, anyone in and around these ETF issuers, they were all, this isn't going to happen. They're all staunchly of the opinion that this had to have been political in some nature, one way or another. And we talked about before, like what actually happened. We don't know exactly what happened behind the scenes, but this was a political decision. I don't think this would have happened if we weren't in an election year. How? What were you gonna? You had another question.
Yeah, I mean, so there's a couple of questions that I'm curious to discuss, which is, what do we think the flows look like, but also the composition of the flows. I mean, do we think, and what? I mean, some people will, but what is the? How do we think about the portion of people that will actually rotate? Right? Like, there's only one ETF that you can buy right now. So there will be two. I think there's at least some people that own the Bitcoin ETF because they want exposure to crypto. They don't really have a strong view about Bitcoin. They just care about crypto. There's obviously some people that do have a strong view about Bitcoin. I think there's like, none of this stuff is binary. It's about trying to figure out, where these lines are drawn. But I'd be curious, James, on your take on sort of like what the flows will look like, and then also the composition of them. Like, how much is incremental money? How much is rotational? Over what time period? And then some of the nuts and bolts about it, like, do all these brokerages have to go through a new process to onboard ETH the way they did Bitcoin, or is it easier now after they've already done Bitcoin once? I'd just be curious to hear your take on that, and then I have my own opinion.
Yeah, so I don't think there's going to be as much rotation as some people think. Obviously, there's going to be some out there, particularly people who put more than just 1% or 2 or 3% into a Bitcoin ETF for their portfolios. But if you're that low, like do you really want to like diversify into another thing? It's more likely you're just going to add to the bucket. And we've seen this across the board. If there's been studies and surveys of advisors who went into this space before we even got the ETFs, it's far, far more common that these advisors were adding to positions, or if it ran up, if they started off their allocation at 1% or 2% and it ran up on them, it's far more likely that they were just letting it run up and not fully rebalancing or increasing those allocations across different portfolios. So my view is I think there will be some of that rotational coming out of some of these Bitcoin ETFs, maybe, but honestly, I don't think it's going to be that much. That said, I do think the demand for Ethereum ETFs are going to be less than the Bitcoin ETFs. I know I've heard some people thinking like we're going to get tens of billions flowing into these newer ETFs the way we saw with the Bitcoin ETFs. I can pretty much guarantee that's not going to happen.
I can guarantee that as well. There's just a lot of nuance about whether it's like 10, 15, 20, 25, 30, 40, 50. Like there's a lot of nuance in there. And that's, I think, why it's so rare. But it's obviously not going to be the same. Like
I'll throw a number out there. Yeah, my Eric, my boss, has 20% as like a higher end number for him. I think 20 to 25% of the flows that went to Bitcoin will come into ETH over like a similar time frame. So if we take like 6 months out, I think you could still get 20-ish%, 25% of the flows that went to Bitcoin.
And what informs that number? I know there's the European comps, which are like closer to 30.
Yep.
So I'm curious what informs it.
Yeah, Canada too. We can look at Hong Kong. Hong Kong was up there. There were some numbers much higher than that number.
Numbers higher than your like 2025, you're saying?
Yeah, exactly. I mean, part of it is one, and some of it's slightly anecdotal because the interest that I'm seeing from our clients and advisors is far less in ETH for now. I think that will change. There is like cash flows that come with ETH and things like that. But I talked about this last time. When you take it and put it in an ETF wrapper, like you're losing some of the benefits of ETH. It's like Solana, you can't do that.
But that's also true for the European ones, right?
Yes, some of them do have staking. It's true for all of them.
Do they?
Yes. So there's some staking ETFs in Europe and there's a staking ETF in Canada. They don't have that much in the way of assets, but I think a lot of the money that it went in.
And just out of curiosity, how does work? They just return it as like a dividend yield?
Yeah, exactly.
Cash dividend yield. So they take the
theoretically they could do both. So basically there's accumulation shares where they would just accumulate and keep adding to whatever, or you can do distribution. So it's really up to however you want to do it, but you're not going to have those in the US. So I just think the demand will be slightly less than the ratio of actual spot ETH to spot Bitcoin.
I mean, another point that supports that in my view, and I'm curious on this, with the ones in Europe, did they launch at the same time? Bitcoin and ETH?
They launched slightly after in most cases, and also they launched before staking was even a thing in many cases. Like the Sweden ones were around in 2015, 2016, I think. So like some of the stuff, it's not apples to apples because right now that comparison isn't the same. But no matter what, there's going to be people that can't get exposure to the direct asset themselves, or as we can say now, it's a commodity. But they'll be looking at the ETFs, but anyone who can get exposure to the direct asset that'll be interesting. And another thing is like I'm sure there will be a lot of people like doing trades, pairs trades and derivative trades off of these ETFs when they come out, shorting the ETF and going along the asset, and then all of a sudden you're just getting yield exposure. There's going to be a lot of unique things that'll happen out there. We've seen a bunch of leverage filings already. We've seen a bunch of covered call filings. It's, you name it, it's already happening for the Ethereum ETFs in the same way it happened for the Bitcoin.
And do you think there's any impact of the fact that, like in this case, Bitcoin went first, a lot of people allocated to it, and that might already be their crypto allocation? Like if people are less likely to allocate to crypto now that they have some than if it was before, like the pool of sort of dry tinder is lower this time around?
I think that's part of it too. I don't know how much of it, but I do think, like I said, there are people out there that kind of just view it as I have exposure to this asset class now. Maybe I'll diversify, but I don't feel any need to right now.
And do you think that on the rotation point, there's any issue with the tax consequence? Like if you bought Bitcoin early, now you're going to have to lock in a short-term cap gain to sell it.
Exactly. I think that's part of the reason why, yes, I agree with that 100%. Like maybe you see more of it a year from GBTC launch or from the conversions, because then you can do a long-term cap gains rotation. But for the most part, most people don't have a big enough allocation where they're going to try to diversify it. Like I can't imagine having a 1% allocation or 2% allocation to something and be like, all right, I'm going to sell a chunk of this and buy a sliver of this. I'm probably more likely just going to add exposure in some way. That's the way I personally do it, so I'm probably biased, but I'm sure there will be rotation. We'll probably see some outflows, but there's no way to know. We'll find out in a month or so, or whenever these things launch.
Yeah, that's another question I had. Last one for me, and then I'll turn it over. So when do you think these will launch?
We don't know. There's no way to know. They started the process, so last Friday they all had to submit their S1 amendments with things that comments from the SEC, and then usually there's a few rounds of that. It could be just 1 or 2 rounds because we already have the futures ETF and we have spot Bitcoin, and there's a lot of overlap there between the spot ETH, but there's still a lot that needs to be ironed out. But theoretically, I think early July it could happen, possibly earlier. We'll know more soon. Like we'll know when we know. I'll be putting stuff out as soon as we know.
Fair. And the main difference here that they're working on is the disclosures.
Yeah, everything about the fund, disclosures about the actual protocol of Ethereum versus whatever, and anything along those lines. It's just really basic risk disclosures. It's boring shit, to be honest, I think.
Okay, fair enough.
Yeah, so I think people are mid-curving this. I think it makes sense to look at, say, the Bitcoin ETF flows and try to back out some percentage. That makes a lot of sense to do that. But there's one huge difference, in my opinion. And it was the original question that you led with, James, which is, how do you market this thing, right? Bitcoin ETF flows. I mean, Bitcoin has been on CNBC and Bloomberg and traditional media, traditional financial media for a long time as this digital gold narrative. And man, that is so easy for a baby boomer to understand. Yeah. Oh, it's like, it's a digital version of this rock, right? That is like an inflation hedge or whatever, right? And I think that is an underappreciated aspect of people that are trying to back out this percentage of how many flows will come in. And yes, we do have comps like Canada and Europe, which I think is totally valid. But this gets back to that question, like, how do you market this thing? And I have struggled to even try to explain, say, the Ethereum roadmap, or what is the tagline of Ethereum? Is it digital oil? Is it, the software layer for crypto or whatever? Like, is it all of these things, right? I think one of the challenges that the Ethereum community has run into beyond the technical limitations is a constantly kind of like flip-flopping narrative, right? There was the ultrasound money narrative, which Bitcoin won that. And then it's like the world's supercomputer. And it's like, well, it's too slow and expensive. So I don't know how you explain, like, how do you create a product that you're going to pitch to people that is as simple as something like digital gold?
I think the key to this one is whether or not, and I don't think that they're going to be, but whether or not they're willing to, like, in a backhanded way, take shots at Bitcoin, which I don't think they will be, because obviously Bitcoin is their breadwinner and like their main product. But like, if you wanted to pitch ETH succinctly, you would just call it programmable Bitcoin, like, or something like that. Like, and like, then you can very easily like get a lot of flows from those Bitcoin people. But I don't think it makes a lot of sense for them, because obviously that doesn't help them to just cannibalize their main product. So it's interesting. Like, you can pitch it just as, like, I think the easiest pitch, frankly, it's just diversification. Like, okay, you have digital gold, and then this gives you more access to actual, like, crypto utility, and you can have both of them, and then you have like broad-based crypto exposure. I think that if I was kind of like designing it, probably how I do. But there's a lot of other stuff around, the actual pitch. It's like you mentioned, like digital oil or these things. They may do that too, but I would imagine it's more just like the programmable settlement layer of crypto, something along those lines.
Alex, you have any thoughts here?
Yeah, I don't think it's that important, to be honest. I think people are overstretching the importance of how you pitch ETH. You can say it in so many ways. Like, for example, ETH is programmable, decentralized financial social network, or decentralized banking. It's by the way, the decentralized oil or digital oil, I think, is the worst of them all. That makes absolutely no sense to me.
Yeah, that one seems like the worst thing. I never heard that before today. That's pretty terrible. I think, to be honest with you, though, like, the best pitch by far is just price. Like, if the thing goes up, people will buy it. That's all.
Yeah, and the one thing I would add here, which we didn't even mention. There's a bunch of these issuers that launched the Bitcoin ETFs that aren't even entering this race. And then we got news on Friday that basically, so ARK and 21 Shares partnered on the Bitcoin ETFs and a bunch of these other crypto futures ETFs. And the updated filing we saw from 21 Shares, which is one of the largest crypto ETP issuers in Europe, at least by number of ETFs. They're going on their own. So ARK isn't even partnering with them. I don't know exactly what the relationship is, what happened there. I can tell you there is a close relationship between those two companies. Ophelia, who runs 21 Shares, and Cathie Wood, or one of the co-founders of 21 Shares, and Cathie Wood have a good relationship from my experience. So I'm assuming it might have to do with the fees. Like the fees got so low so quick that like two firms trying to like figure out how to handle 21 bips on however much money they have. There's probably not enough money to go around for two firms to have their I guess fingers in the cookie jar. Invesco's doing with Galaxy again on the Ethereum ETF front, but you also have Valkyrie, who is acquired by CoinShares. CoinShares has products in Europe. They basically decided they weren't going to enter this race. Part of it probably has to do with the amount of competition. I think part of it, they said even outright, was because basically if there's no staking, they don't see it's going to be even harder. WisdomTree is out, Hashdex is out. So like we've seen a bunch of these guys that competed in the Bitcoin ETF race have decided it's not even worth their time to go into the ETH side of things.
Well, to Alex's point, the price is what matters. So let's talk about the ETH BTC pair, right? So even with the enormous amount of activity that was favorable to Ethereum's price action when the news came out, ETH BTC is only up 1% year to date. And it didn't even get back to its January highs. So Alex, I know you're bullish on ETH BTC. I want to know when it's going to take out our year-to-date highs and why there's going to be more money rotating out of Bitcoin and into ETH.
I think it makes sense for ETH BTC to continue higher into the ETF launch, basically.
I mean, that could be a long time.
Perfect, a long time to go up. That's my point. It's like, say, July. We have a month and a half. And then I think something else that it makes sense for us to see is basically Grayscale selling the same thing that happened with Bitcoin. So ETH BTC topping right around the S1 approvals and the launch makes sense to me. Right now it's what, 55? Yeah, almost 55. So like take it to like 70. That's pretty good. Yeah.
Before we move on from Ethereum, how do you have a view on the ETH BTC ratio?
I do, but I'm not sure I want to share it.
No, you have to.
You have to now. Let's get some disagreements out here.
This is a safe space.
Yeah.
No, I don't have any strong opinion.
All right. Moving on. Let's go over to Joe. There was some news out of Hong Kong recently relating to crypto exchanges. Why don't you intro this one?
I saw this and it stood out to me because Hong Kong has historically been, kind of like the Biden administration, very kind of anti-crypto. And they've pulled a huge 180 over the course of like probably the past, 18 months. And I saw an announcement that they're granting 11 licenses to crypto exchanges in Hong Kong, including crypto.com. I just thought this was newsworthy because, I'm an American. I'm assuming most of us on this call are Americans. Like we have such a US centric lens that we tend to forget what's happening outside in the rest of the world. And yeah, I know that the Hong Kong ETFs for Bitcoin were only like a tiny fraction of the US, and the US is obviously the largest market. But there is something interesting about Hong Kong really going full throttle with their continued efforts to make Hong Kong kind of like the Wall Street, if you will, of crypto. And it's also an interesting timing because of the kind of pivot around Biden administration. Yes, the veto happened. We already talked about why that was the case, but it just feels like there's just continued momentum for people, obviously countries, governments really starting to recognize the potential value here for enabling the innovation and the stuff that's happening in the space. So I just thought it was worth mentioning just because, crypto.com is one of the folks getting the license, and they are, they sponsor like the arena where the LA Lakers play, right? So this is starting to like bleed into the United States, whether we like it or not. And it almost feels like a lot of these countries are going to be, continue to apply some level of pressure on the US even though thus far it hasn't really mattered.
Yeah, I mean, Hong Kong, isn't that where SBF started FTX? It's a good start. No, I think there's some more.
Technically, he started it in the Bay Area.
Yeah, valid. Yeah. I think well, he started Alameda in the Bay Area.
Or Alameda, yes.
Yeah. I guess my overall thought is I think it's very intriguing that Hong Kong is doing this, because Hong Kong obviously is now more and more tied to China mainland itself. I think we're still a long ways out from these mainland Chinese investors being able to invest. They're still not allowed to do it. There's a lot of restrictions, capital controls, what have you. But I'm with you. I think this is likely probably like I don't want to say testing ground, but maybe testing ground is the right word. They're laying the groundwork to see how this could work, and then eventually, theoretically, if the Chinese are really the ones pulling the strings here in Hong Kong, obviously they are. It could mean something down the line, but I think I don't want to say it's nothing right now in the grand scheme of things as far as more current markets are concerned, but going forward, I think this could be a very big deal.
Yeah, and one other thing, this is a good segue into the macro stuff that I know Alex wanted to chat about. There's been a significant amount of investment flows into China and Hong Kong recently, which we kind of touched on, I think, in the last pod about this kind of Shanghai Accord 2.0 happening. And it is interesting that the investment flows in traditional financial products have really started to tick up. The Hang Seng and the stock exchanges over there have been kind of ripping. Alex, do you think any of this has to do with the broader macro stuff here in the U.S.? I know we should probably cover like the PCE print from last week and what that means. What are your thoughts?
I think it has nothing to do with the U.S., to be honest. China definitely pivoted, so that's really good for risk assets, and it's good for crypto. On the U.S., we had PCE last Thursday, and it came in line, excepting core. Core PCE basically month on month came a tad lower, and that was basically enough for sending at least rates like really, really much lower. By 20 basis points, the 10-year, and that's like inflation coming down is exactly what we want to see, not too much. And more importantly, we have payrolls this week, and I have to say that I tend to think that I don't think it's really that important. I think where the Fed is in a stage where they need to see a lot of data for them to move. And they are, I'm saying this because they're saying it actually. Like we have Fed speakers coming out every day or 3 days a week. And their messaging in the last few weeks has been that is like, don't stress about single data points. We are looking at really, we're trying to define our next actions based on the trend. So unless something extraordinary happens, I think we need to see 3 data points like considerably above or below for the Fed to accelerate their actions. And something else I wanted to point out here that I think is very interesting is that it's basically immigration, undocumented immigration in the U.S. It's I was looking that basically it's added 1/3 of the growth of payrolls comes from there in 23 and half in 24. So what that means is that the U.S. economy, even though it's doing well, is not doing as well as we may tend to think. So if we start seeing the Fed paying attention to immigration numbers, we may see the Fed cut rates sooner than expected. They barely talked about this, by the way. They've done it like twice. So, yeah.
They do a lot of talking. On the screen right now, I'm sharing it. You can see where the markets right now are basically pricing 1 cut by November, and then a second cut by the end of January for that meeting at the beginning of 2025. Yeah. So right now they're pricing 2 by the end of January 2025. They've been these markets have been very wrong over the last 8 months. So I'm not really sure what this really matters, but just figured I'd throw that out there.
Hey guys, unfortunately I have to run, but thank you so much for having me on.
Yeah, thanks for joining.
Thank you, Hal.
Have a good one.
Cheers.
One thing I'll add about the macro stuff, particularly PCE and the labor market, one is that we're starting to see actually like disinflation in the pipeline. So I actually still think that prices are going to be coming down, and we're being told this by some of the largest retailers out there. So Walmart, Target, Amazon's, Walgreens, they're all like stepping up price discounts for the budget conscious consumer. That's disinflation. You're seeing McDonald's, Jack in the Box, Wendy's, Taco Bell, they're discounting meals, and even travel discounts, which we haven't seen in a very long time because of the revenge spending for travel post COVID. Those are actually starting to pop up, and it's the first time I think since 2020 you've actually seen this. So I think on the one hand, there's a forecasting of disinflation that's coming, and then on the other hand, we just had the ISM report come out today, and it was pretty much light across the board. Manufacturing is still struggling, though. I think like there is like one bright spot there, which is CapEx spending has been ticking up. This is largely driven by I would say deflationary things like investing in hardware as it relates to AI. So there is like one bright spot there, but consumption is likely going to moderate. The price conscious consumers goods are coming down in terms of price. And the manufacturing industry is actually, I think 19 out of 20 months in a row now is contracting. So this is definitely important information as it relates to the economy. Now the Fed is not, designed, their mandate is not the economy. It's managing inflation and employment, which is why the employment data, I think, coming this week is going to be so important, because a lot of the forward-looking indicators are actually quite soft. You're seeing labor demand easing. You've got the JOLTS data that's coming out. We'll see what it prints, but the trend has been that there are more people, there are more job openings than there are available workers. And so if we continue to see this, I think to Alex's point about the Fed is going to need some, pretty compelling data to justify cutting sooner than what the markets are pricing. We may get that. And my view has been for quite some time that it is really all about the employment data, as I think the disinflationary pressures that are coming in on the consumer are well forecasted at this point.
Can we define those travel discounts? What do you mean by that? Because I've been in the airport a lot lately, and it's obscenely packed. And I mean, the travel numbers are crazy, and I kind of want to take advantage of them.
So, so two things. One, cruise ship cabins for the summer are empty.
Yes.
So they're trying to fill those up because they're like, wait a second, we can't be sending out boats that aren't full. So they're slashing prices there. And then there's this app called Hoppers that is kind of like they forecast airline prices. And it's the first time since 2020 that they're seeing or forecasting airfare drops, which is pretty remarkable. And by the way, like just as an aside, crude oil is trading just above $70 right now. It's only up about 3% for the entire year. I think a month ago there were people stammering about stagflation. It's like, well, it's really hard to have that when oil is collapsing, right? So if oil's only up 3% for the year and you're seeing consumer goods actually moving towards disinflation, I don't know. Feels like this restrictive policy that the Fed has in place has got to change sooner than later.
Yeah, we had a big drop today in WTI. It went from 78 on Friday, and it's now at 74. I mean, I guess it's not that big, but it's still
it is big.
Yeah,
that's a big move. That's a big move.
Yeah.
Oh, and by the way, I mean, I think to Alex's point, the fixed income market has been rallying, meaning yields lower, and a lot of that, even today on Monday when we saw the ISM numbers coming out, some people will assume that is related to the contraction in manufacturing could be signaling a recession or the economy slowing down. But it's also been going on for a few days now. To Alex's point earlier, the 10-year dropped, I think, from 4.4% to 4.2. That's a huge move in the 10-year. And so there is clearly demand for U.S. Treasuries getting bid up here, which also has a kind of a direct correlation as it relates to the Fed's policy and what the markets are pricing.
Alex, you have anything to add?
Yeah, I think the key there is that it's not really getting I mean, the question is, are we slowing down because we're going towards a recession, or are we slowing down because just we're slowing down a little bit? And it's quite likely the latter. Therefore, this is what some people call in markets Goldilocks. It's you have basically growth and inflation coming down. We have rates coming down. We have the dollar that has stopped quite likely. It looks like it so far. We talked about it what was it, 4 weeks ago? And it's been coming down.
Yeah, with the yen, right? We talked about with the yen specifically.
Yeah, exactly. Yeah, things look good. I mean, the main concern is actually not seeing things to be concerned about. That's the way I see it.
All right. I guess that's it for macro. Let's talk into some more current event type stuff. This one just happened today as we're recording. So this is Monday, June 3rd that we're recording here. The New York Stock Exchange had some pretty big glitches today. We had Berkshire Hathaway down 99% ish. Chipotle also got hit. Abbott. There was a few others. I'm not sure why certain ones were singled out, but there were certain names that were obviously having massive glitches. And recently we just had some moves in the U.S. We went from usually the way stocks settle. If you paid attention to the GameStop saga from 22 or 22, I think. There was a whole bunch of issues where they had to stop trading because they didn't have enough capital to do settlement issues. This is now T+1. So when you buy a share, it doesn't settle into your account until the day after. This is a move. It usually used to take 2 business days. So there's some speculation that it might have had something to do with that move. As far as I know, that's not confirmed yet. But I guess I'll turn it over to you guys. But what do you guys think about what's happening today, and how does it relate to the more crypto markets that we're used to looking at?
I mean, I would buy hand over fist Berkshire Hathaway down at 99%. I'm just going to put it out there. I don't know about you guys, but it feels like there's some deep value there.
I think I need confirmation,
Deep effing value, if you will.
Yeah.
Little preview.
The RSI has to cross back up.
I mean, look, like as the resident technologist here, like this is software, so there are going to be bugs. And I think the expectation is that the NYSE has been around for so long, and even the NASDAQ and these other exchanges, that these types of things don't happen. And in fact, that the NASDAQ has had outages a handful of times over the past 20 years. This is software. I mean, this is what happens with technology, especially with these types of, a T+2 to T+1 is a pretty material change. Granted, the engineering teams likely should have and likely did test all of this kind of stuff. But this kind of raises a bigger topic as it relates to technology in general, is that in some cases you actually can't find bugs in the code until you're in like what's called a production environment, where it's a live, real environment. And I feel bad for the technologists that were at the NYSE today, because oh my God, pretty sure some heads are going to roll. But I'm not like surprised, right? This is just the way this type of stuff happens to work. And no software is bug free. And you see this also in crypto, right? Like obviously Solana's had reliability challenges. Same thing. When they get crazy amounts of activity on chain, there are going to be bugs that only surface in a production level environment. So I hear this argument a lot of like, well, you can only use this chain because it never goes down. No institutional investor is going to put money on, say, that chain because of its reliability issues. It's like, well, what do they think about the NYSE and the NASDAQ? Because they have the same issues, right? So I just don't buy that argument. But man, it was crazy to see Berkshire down 99% today.
Yeah, I saw a tweet on like people posting images of them able to actually acquire that stuff when it was down 99-ish%. I have a feeling that will get rolled back, but I guess only time will tell.
Yeah, those trades don't hold 100%. Yeah. They don't hold.
Yeah, broken trades.
So
imagine thinking you just made however many $100,000 on a single trade.
Imagine that. Like, yeah.
Go ahead, Alex. What's your thoughts on this?
I think it's just a distraction, like fun. It's funny to see it happen, and never will we talk about it, but it doesn't really matter. The one that was even more fun was the Roaring Kitty GME comeback. I mean, that thing went up. What is it? So went up 100% overnight. And now it pulled back, is only up 30% on the day. It is still really
Only.
impressive. So only, yeah, which for equities is massive. I think the question there for to discuss is the big thing is what he did in any way illegal? And I tend to think absolutely not, as there was no material use of private information that he was a participant of. So if you don't have information that was given to you that is private and it was given to you by someone who actually is related to the company in question, that is not insider trading. So why would it be illegal? What do you guys think?
I mean, I'm with you. I'm definitely not a lawyer, but posting screenshots of your P&L, I mean, this is literally Wall Street Bet's whole thing on Reddit, right? Like, this is what they were doing, whether they were up a ton or they were getting smoked, right? Is there a law that they're breaking by posting your P&L? I don't know. I don't think so. Again, I'm not a lawyer. But if you're Gabe Plotkin, you may not want this to ever happen again, right? And other folks that are, kind of have a stranglehold on TradFi, which is so interesting because one of the things in crypto, especially, it's still to this day, across these exchanges, whether they're DEXs or SEXs, you can post your P&L for your trades or your portfolio, and it's actually like part of the cultural lore of trading crypto.
I mean, wait. 1 sec. We should take a step back and explain it. So he basically he sent this thing going crazy with a bunch of tweets and memes and things going on like that. And then what he posted over the weekend, when was this? Last night he posted it. On Sunday night, He posted that he had like a $250 million notional exposure via calls. Again, I don't know
illegal?
I don't know. I mean, combined with all the tweeting and stuff,
illegal?
I guess it depends what he's doing with it. If it's his own money only, and I don't know. It's definitely. I don't think it's as black and white as Alex and you are making it out to be. I think there's some gray area, and if I'm somebody at the SEC, what have you, I'm going to be looking into it and make sure that seeing when these trades went through, how they went through. I mean, even E-Trade now has come out via the Wall Street Journal saying that they're thinking about, I don't know what other word to use other than deplatforming. They're thinking about like taking them off E-Trade because they're worried about this being insider trading. So yeah.
By the way, that is only going to fuel the kind of populist revolt against this. I mean, it was the same thing back in 2021 when they were, trying to do all of these things, Robinhood and then the Citadel, PFOF, and all, like, people were just irate because they were feeling like they were getting shafted because they weren't, institutional guys on Wall Street, and they just liked the stock, as they say. I just it's just like, on the one hand, he has to know, given what he went through, what is going to be considered illegal or legal at this point.
Yep.
And I mean, come on, right? Like, if he's got that much money invested in GameStop, I'm pretty sure he hired a pretty decent legal team, right? And I'm pretty sure that the memes that he posted, those are just memes, right? Those are just videos that he created or whatever.
They were pretty good, by the way.
Yeah, they're very good.
They were like
professional quality videos and whatnot. Yeah. Is that illegal? Man, I hope not, because if just because he's this guy and he posted this thing, can you causally connect those memes to the price of GameStop going up? I think it's obvious there's a correlation there, but to say that he posted this and therefore the price went up, man, that seems challenging.
I mean,
even if he did, so sorry, James, but even if he did, that's perfectly legal. It's like basically like Ackman going out and saying that he's short in treasuries, and treasuries basically collapsing and rates blowing up, or
Hindenburg Research writing those short pieces.
Yeah, exactly. Yeah, it's part of, you go out, you do your piece, then you go out on the media and you publish it and you move the price. It's legal.
Yeah.
So this is even more fun.
The other thing to note here is that this had an impact on meme coins today on chain, and there's this interesting correlation now that, like, when he first started tweeting again, you saw a bunch of meme coins rip, and on Solana there's a bunch of meme coins that are named GameStop and Apple and Palantir and all these things, right? They're clearly not like tokenized versions of these stocks, but it doesn't matter. the GameStop, I think when he tweeted Sunday night his like P&L, the GME token on Solana was up like 300% or something, right? It's just fascinating because you can see what happens clearly on chain, transparently 24/7, and then today you hear that he's at risk of getting deplatformed on, you know, the approved platform for trading stocks that are obviously registered securities and kind of regulated by the SEC.
It is thoroughly entertaining, if nothing else. I think this is going to fizzle out a lot quicker than the last time, or I guess than the first time we had meme stock mania. I mean, this thing, overnight it went to $40-ish, and now it's trading at 28 after market. I think it's just, for the most part, I think people are just kind of tired of this. I don't know. That's do you guys feel the same way? I think this is largely kind of done, but time will tell.
I mean, look, I have no idea where this is going to go, but I will say that the summer is about to be here. Things, you know, the liquidity in markets, especially TradFi markets, gets a little thinner during the summer. And if you got a lot of young adults on the internet that want to YOLO on Robinhood, who knows? I don't think anybody thought GameStop could trade $600 like it did the first time it went. So I think a lot of people are looking at, I think some people are looking at this going like, I don't want to miss it this time. And then on the other hand, I saw it on Bloomberg today. Forget the guy's name, but he's a famous short seller who's come out and just put a target on his back. He said, I am short GameStop. And I'm like, I mean, they're threatening deplatforming. And if you've got all these people on Wall Street Bets that are just going to start to rally behind this again, I mean, this is just something, to me, feels like the asymmetry in shorting GameStop here is just insanely stupid.
Yeah, I mean, with the T+2 to T+1 move, I mean, theoretically, Robinhood won't have the same level of potential issues. They don't need as much capital, so they won't be able to stop things theoretically. All right, guys, this was fun. Thanks for joining us in this episode of Bits and Bips. We'll be back in 2 weeks to discuss more about how the world of crypto and macro are colliding. Till then, we'll talk to you soon.
Thank you, guys.
See ya.
Ciao, ciao.